Hello and welcome to Moneycontrol. My name is Ashwin Mohan and you're watching a brand new edition of Deal Central, where we get you the views and the news that matter from the world of mergers and acquisitions, global private equity and equity capital market deals. Joining us on the show today is renowned billionaire investor Jean Salata, the chairperson of EQT Asia, which has more than $250 billion globally in assets under management, making it one of the biggest private equity firms in the world. Of course, in India, it's pumped in $8 billion in the past across more than 30 firms. Jean, thank you so much for taking out time and welcome to Moneycontrol.
Thank you, Ashwin. It's a pleasure to be here.
All right, so let's kickstart. And this is where, I have to ask you this because this is a topic that has sort of gathered momentum over the past few days. And that's the sudden conflict between Iran and Israel, right? That has led to a lot of rise in geopolitical tensions. These are the kind of conflicts that lead to countries and even allies getting engulfed. Since you're a key global investor, what is your take on such kind of a crisis, unexpected crisis, and its impact on the overall investment environment?
Yeah. Well, the situation is very fluid and it's really hard to predict, and it's probably too early to make any comments about what will happen. Obviously, it's something that we're paying attention to. It's a concerning development. At the end of the day, it's something completely outside of our control as well as investors. So I'd say at this stage, we're observing, and that's really all we can do at this stage.
Right. There's another situation that is, in sort of a fluid state right now, and that's, of course, the big national elections, in India. The country is in election mode as we speak. Curious to know the equity stance. What's your take on the impact that perhaps such a big event can have on your investment plans in India? Is it going to be wait and watch mode, or is it going to be just business as usual? Because at the end of the day, elections is linked to policy, and policy continuity is important for folks like you.
Absolutely. I'd say that under Prime Minister Modi, the investment policies and general overall policies for foreign investors in India have been very favorable and very consistent. And we as investors like that because it creates an environment that's conducive to forming a view for the long term. We're long-term investors. We really typically own assets for at least 5 years, sometimes more. And so when we're buying into a business, we need to have some clarity as to what the outlook is for that particular industry and for the country as a whole. And so the broader macroeconomic backdrop for India has been extremely favorable and actually very positive for the last 10 years. And we expect that to continue. So we believe that whatever the outcome of the election is, if there is continuity in terms of the current policy, that would be a plus for investors.
Absolutely. Continuity, that's the key word, right, for most global investors. As far as India is concerned, we met one of your peers recently, Jonathan Gray, the president and chief operating officer at Blackstone, a big global investment giant just like you guys. And his team told us that Blackstone is looking to pump in around $2 billion annually in India. So what I want to know from you is there any annual investment target in terms of quantum that, Jean, you have set aside for India? And also, if you could throw some light on what's the kind of monies that equity is looking to pump into India, say, over the next 5 years?
Yeah, we've done some numbers on the historical investments that we've made relative to the industry. And based on our analysis and also some third-party numbers, the cumulative investments that we've made in private equity in India over the last 5 years would rank us as number one in terms of foreign investment into India through private equity, which is around $10 billion. If you look at just the last year alone, we've invested $2 billion through investments like Credila that we just closed, or HDFC, or Indira IVF business in the healthcare sector. And we, at the moment, as I was saying to you earlier before we started here, that our pipeline right now is actually the strongest that we've seen in India. We currently have $5 billion US dollars of investments in the final stages of review, diligence, and investment approval.
Over what time frame?
I don't know if all of them will close, but if they close, that would all happen this year.
Wow!
So it's a big number that we're working on.
A fresh $5 billion potentially this year.
Potentially, yes.
Wow! All right. May I sort of push my luck and sort of ask you to sort of throw some light on which sectors are we looking at? Because, there are some sectors that have been favorites of equity in the past. In the past, you have looked at technology services, healthcare, pharma, financial services, consumer. Is it going to be within these buckets, or are we looking at a few newer sectors that have caught your fancy?
Well, historically, our biggest investment sector has been technology services. That's where we have made the most investments. We were just adding it up earlier today. We've invested in 50 companies in India in the IT services sector. 12 that we would consider what we call platform investments, and another 38 bolt-on investments. So a total of 50 investments in different parts of the IT services value chain. And they've done phenomenally well. Our overall return on those investments has been something like 3.5 times our money. If you look at the other sectors that we've begun investing in, healthcare is a big one. And healthcare is an interesting sector because EQT globally is actually very strong in healthcare. And after the combination between Baring Private Equity, our firm originally, Baring Private Equity Asia, and EQT, which we announced a couple of years ago. After that combination, now we've connected our sector teams in Asia with the global sector teams. So our healthcare team in Asia now benefits from all the experience and knowledge that our healthcare teams in Europe and the United States have, and that track record, and also the industrial advisor network that we have. And I think financial services generally is an area that we like, and we've been looking at actually for many, many years, but this is the first large-scale investment that we've been able to close, and we're very, very happy about it. We like the exposure to the education sector that it has. And I think generally healthcare, education are areas that we like to be involved with because they also have a positive impact on society and are benefiting everyone in the country in many other ways other than just purely as a financial investment. Beyond that, we are also actively looking more at consumer, more at also manufacturing and export manufacturing, as you start to see some of the production-linked incentives kicking in from the government. So we're seeing, new drivers of growth in many different areas of the Indian economy, whereas previously we were more narrowly focused purely on IT services.
So you mentioned a lot of sectors. That $5 billion target this year, this calendar year, would it be safe enough to say that perhaps IT, pharma, healthcare would take care of that quantum?
IT, pharma, healthcare, and financial services would cover that.
I've got my answer. All right. Now, Jean, what's your take on the government's policy environment when it comes to deal makers like you, right? What more can perhaps the Indian government do to make India a friendlier destination for investors? In the past, of course, they've received the thumbs up from many global investors, and in the recent past, many believe that India is the current bright spot in the global economy. What more do you think can be done from the policy point of view, regulatory point of view, any global best practices that perhaps India can sort of add?
I think India is doing a very good job in this category. And I think the key here is consistency, clarity, transparency. One of the things that makes foreign investors have confidence is that there is clear rules and clear laws related to investments. And if you abide by those rules and abide by the laws, you will be treated according to the rules and fairly. And I think that's been the case. And that's been our experience. And I think regulators and our interactions with the regulators have been very favorable. And it's been dealt, when we've had issues or we've had questions or there's been concerns or delays, we have been able to approach them and discuss them and resolve whatever queries and questions we had. I think that's important that continues. The other aspect of foreign investment is really the currency risk. And I think there again, I think the RBI has done a fantastic job in dampening the volatility. And I think the overall economic policy of the country has resulted in a fairly stable rupee for the last couple of years. That's very different than the historical experience that we've had where the rupee has been gradually depreciating over a period of time, and that's created more uncertainty.
Right. Now, shifting focus specifically to the healthcare space, right? In that space, you have Indira IVF, one of the biggest in its segment. That's a big deal that you guys struck last year. Then you also have presence in AIG hospitals. Meanwhile, the hospital space in India, I've been tracking it very closely in the last 6 to 12 months. There's been frenetic deal activity, right? A lot of hospital acquisitions, a lot of hospital M&A, a lot of consolidation. Blackstone bought out care hospitals down south in Kerala. In my home state, they bought out Kim's hospitals. So there's a lot of hospital M&A activity. Are you bullish on this space? Because currently, as we speak, there are a few hospital assets that are looking to sort of induct investors. One is, of course, Aster DM Healthcare. Then we have got another one, Healthcare Global Enterprises, which is backed by CVC. Do any of these assets sort of interest you and your India team?
Well, I think if you just step back, the reason why healthcare is such an interesting sector is because it really is a direct play on the growth in consumption and the growth in essentially the middle class in India. The numbers that we were looking at in our team recently, we have something like 60 million people in India making more than, say, $10,000 a year that you can define as a category of middle class. That number will go from 60 million to 100 million, probably just in the next few years. So in a fairly short period of time, that number is expanding rapidly. One of the first things that families want to do when they have some extra income is they want to spend money on better healthcare for their children, for their parents, for themselves. And we see that at AIG. I mean, AIG, I was in Hyderabad recently, and we have something like literally 45,000 outpatients per month going to receive treatments and getting procedures done. And that level of activity is really phenomenal.
Yeah,
and if you look at Indira IVF, we have something like 125,000 families that have children now that wouldn't have had children had they not gone to get the IVF procedures done. So these are large numbers of people that are taking advantage of the services that are available to them now. So I think that's the attraction. In terms of specific assets and activity, I think they will continue to be highly sought after because they're hard to come by. These scale, well-run large hospitals, as well as chains of service providers. But I think, valuation does matter as well. So there's some market equilibrium that needs to be
So you're not ruling out further hospital M&A in India?
No, we're not ruling that out.
All right.
Yeah.
Let's talk about the public markets in India, right? Sustained buoyancy, right? Sensex hit 75,000 recently. A whole host of companies looking to hit the Indian public markets to try and gain advantage of the valuations. A lot of new companies across exciting sectors. A lot of frequent large-size block deals. That wasn't the case earlier. In the last 1 year or so, it's become the flavor of the season. Now, is equity looking to sort of take advantage of this current buoyancy and perhaps look at listing any of its Indian portfolio companies? And also, why is it that you have usually stuck to private targets and you have stayed mostly away from the listed space in India? Is that only India specific, or is that something that you prefer globally as well?
Well, we generally prefer to invest in private companies, not public companies. That's our strategy. If you look at the exit markets here, the public markets, it's interesting to see how much they've developed in the last 10 years or so. If you look at 10 years ago, the GDP of India was something like 1.8 trillion, and today it's like 3.5 or 3.7 trillion, so it's doubled. The public markets have gone from a market cap of about $1 trillion 10 years ago to about 4.5 trillion today, so almost a 5x increase in market cap over the last 10 years. That's a massive increase in the liquidity pools available to investors here in this market. I think that has created an environment for firms like ours where when we take a company public, like Coforge, for example, which is a listed company, we were able to sell our stake gradually over time of about over $2 billion into the market to domestic pools of capital, to domestic investors. And that was very well received.
Yeah, it was one of the biggest block deals last year.
It was actually one of the biggest block deals, about $1 billion in one deal.
Blackstone did one in Embassy, and this was the other big one towards the end of the year.
Exactly. And if you look at the stock today, it's trading higher than when we sold it. So people have done well, which creates the right sort of environment. We want people to make money, people that buy stakes from companies that we're disposing of and getting monetization events done. But the market's gotten deeper and it's gotten more local. And I think that's a very positive development for our industry.
So any IPOs?
IPOs,
or would you prefer?
We will definitely be looking to do more IPOs in India. I think the market's developing here very well, and it's a really interesting way for us to monetize our investments. Yes.
Equity has traditionally been a buyout fund, right? Can we expect you to perhaps look at altering your strategy and maybe looking at a few minority stake opportunities as well? There are a few other global bulge bracket private equity funds as well, always doing buyout, but we have seen them looking at a few minority stakes and nibbling away where they usually don't nibble.
Right.
Would you step into that space? Because there's a whole space of exciting internet entrepreneurs.
Yeah.
The consumer space, the tech space. Is that an area that you would perhaps look at?
Our preference really is to stick to controlled buyout investments. However, we will do what we call sort of partnering deals where we might work with the family or the promoters, but generally we would take a majority stake and they might roll, like Indira IVF is an example where we bought a 70% stake and the family rolled into a 30% existing stake with us. So we continue to be partners together, but we would have the controlling stake.
Okay. What next after the big bang acquisition of HDFC Credila in the financial services space? Right now, as we speak, housing finance, it's a hotbed of deal activity. stake sales, some companies going public. Financial services is also an area where there's a lot more penetration required. What role can we expect equity to play?
Yes, financial services is an area of focus. Housing finance, we think, is very interesting.
Okay.
We would like to do more there. And I think generally the demand for credit in the economy is significant. And we're trying to increase the amount of access that people have to credit in specific areas where we can really be a service provider that's differentiated and providing people with good value.
My final question to you, Jean. You have observed various countries across various geographies, across your long career, right? Of course, you're based out of Hong Kong. You've had a good look at India, $8 billion spent over here. What are some of the key private equity deals private equity trends, in fact, that you see emerging in India? Are there any big picture trends which you see taking up shape in the next year or so? I'm asking you because you have a global lens, you have an Asia lens, and perhaps you can throw some light on this aspect.
I think the biggest trends that we've seen in India have related to the development of the buyout market or the control investment market, which it used to be a minority investing market here. The development of the buyout market has, I think, resulted in a maturation of our industry and a scaling up of the industry because it attracts much larger pools of capital and can also, I think, have a more transformative impact on the companies that are being acquired. And I think it's been well received. I mean, if you look at total buyout deals, it's probably something like over $10 billion a year. That could be a $50 billion market by 2030, which would make it one of the biggest markets in the entire region. So I think that's one big trend. I think the other interesting trend that we're seeing globally is just the amount of investment going in infrastructure, and particularly renewable energy. We think the energy transition is going to be extremely exciting. And I think India has got a big role to play in the opportunity to invest in this area. And I think we're just starting to see the very beginnings of the scaling up of infrastructure investment in the country. But that will be a much bigger opportunity going forward.
All right, John, on that note, I must thank you for taking out time once again and speaking to Moneycontrol and joining me on Deal Central. All the best for your coming bets in India, and hope to catch up with you the next time you visit us.
It's a pleasure, Ashwin. Thank you for having me. Thank you very much.
Yeah. With that, it's a wrap on this edition of Deal Central. This is Ashwin Mohan signing off. Stay tuned to Moneycontrol for more news, views, and updates.